We saw the Australian dollar break down last week on US dollar strength, so I'll have all the details in today's video as far as where I think this market's going, including key levels and targets, including a potential 200 pip move, plus the latest on the DXY. Now, if you guys do want to join me in the VIP group to get my help with your trading and also see daily videos, get my trades live, and also the upcoming course that launches this week, click on the link at the top of this video, and you are going to be given an 80% off discount on lifetime access. So even if you stay in the group for just 1 year, again, it's lifetime access, but if you stay there for 1 year, it comes out to less than $1 a day for my help with your trading, and everything is hosted in Discord. Okay, so looking at the Australian dollar, what we saw last week was obviously US dollar strength, following bond yields higher, also a lot of concerns over what's going on in the Middle East, plus we're seeing a flight to safety, just generally speaking, okay? So the Australian dollar, we saw a breakout from this trend line right here. So let's talk about this first, where we saw back here earlier this month, the Australian dollar broke out from this trend line right here. So you can see we've got these touches even right here before the breakout. Now, the market spent 2 days above this level, and you can see right here on the 10th, this is when we got that big US dollar rally, and that's where this failed. So as of right now, this up here is a fake out. Now, you can also see where the market has for the past few months, like a lot of these markets, just spent its time consolidating. Now, you could make the case that this is an ascending channel. All right, so based off of these highs right back here, we've got these lows, and you can see right here before the breakdown, there were 2 lows that marked the bottom of this channel. So Friday closed below this area. So far today, we're seeing some consolidation down here in this area. So let's talk about this as far as where this market could be headed. Now, I do want to point out that this horizontal you see right here at 0.6512. You may be wondering why I have this on my chart, because here in the daily chart, it doesn't look all that significant. There are a lot of, closes above and below. It also cuts off a lot of candle bodies. However, if you go to the weekly chart, and this is why it's important to look at multiple time frames. First of all, we have the market moving within this sideways range, going back all the way here to late 2022. Okay, so from this low down here, you've got these 2 highs, and you can see where the market has just spent its time consolidating. Okay, so that's first and foremost. Now, this horizontal at 65.12, this on the weekly chart, you can see is absolutely textbook in terms of the open and closes. Okay, so back here, we had a close right here at the level. So if you mark it from there, you can see the open next week. This close right here, the market broke above, it became support on a weekly closing basis, right? None of these weeks throughout this recent consolidation closed below 65.12 until last week. So this has been a significant pivot for this pair for quite some time. And in fact, you could even make the case, you could go back even further here and say that this has been a significant factor going back to May or June of last year. Okay, so again, closing price back here, all of these highs, these closing prices through here, and all of these closing prices through this area over the past few months. Okay, so based on that alone, this here last week from the Australian dollar was potentially a significant breakdown. And again, it comes off of that daily failed breakout that we saw from that trend line. Okay, so I do like the idea of looking for shorts here while below 65.12 on a weekly closing basis. Now, the thing to keep in mind is that we haven't quite seen a retest of this area as new resistance. Now, nothing guarantees that we will. Okay, we could just see it, do this here today and then start to rotate lower tomorrow. And keep in mind that we do have some event risk, high impact event risk out of China here over the next few hours. So the upcoming Asia session could be quite active for the Australian dollar because it does move on China news. Okay, so looking here, again, this area up here is going to be resistance for this pair. And as for support, of course, we do have this low down here that you've got to be aware of, just because this is clearly going to be support for this market. Okay, so right down here in this area, right around 64.40. So that's going to be support. However, if you look at this range, okay, it is looking like we will probably get a return to those October lows down here right around 62.85. And this is backed up by what we're seeing on the US dollar, the DXY. All right, and if you guys do enjoy this content, guys, be sure to subscribe to the channel and smash the like button because these videos do take a lot of time to make. So please show your support, smash the like button, and subscribe. All right, so the DXY, guys, the US dollar index, this is what we talked about last weekend. I mean, we talk about it every day, but this is the breakout that we talked about over the weekend. And notice how on the weekly back here, these are the recent range highs that I've mentioned. And you can see that level comes in right down here. And these lows through here, I mentioned this on Saturday, all right, these two levels, notice where the DXY is topping out today. If we look at the 1 hour, look at this range. These are the two levels I pointed out over the weekend. Okay, so we've got support down here right now. So 105.86 or so and 106.15. Look at this high right here. So this is resistance, support down here intraday. Now, I'm not really concerned about what happens here over the next few hours because I'm more focused on the higher time frames. What I really care about is where this goes on the daily time frame. But again, what you can see here is that we have support down here at 105.86. We've got resistance up here at 106.15. So these are the two levels. It's no, coincidence. It's no surprise that the market is bouncing from this area and finding resistance up there. So this is going to come down to where these daily time frame candles close with relation to these two levels. If we see a sustained break above here on the daily chart, then I do think we're looking at a run back here toward these range highs right around 107 for the DXY. Now, if we were to see a daily close back down here, then that could signal a pullback for the dollar, okay, down here toward potentially like this high down here, or maybe 105, although I'm not convinced that we do see the dollar that low. And that's just based on what we're seeing from other currency pairs like the Euro USD and the Pound USD, and even the Australian dollar. Now, let's also talk about U.S. bond yields, because we mentioned this last week. We talked about this last week, where the U.S. 10-year right now, and a lot of people, at this point might switch off the video because they're thinking, what do bond yields have to do with the forex market? And honestly, this has everything to do with what's going on with the dollar. Because like I mentioned last week, if you take a look at U.S. 10-year yield, okay, the U.S. 10-year yield, compare that to the DXY on the daily chart, you can see that going back years, these two have a very positive correlation. Okay, so if we're seeing the US 10-year take off like this, which we are, okay, and this is continuing, this is what I talked about last week. And furthermore, I do want to point out that this weekly close above 4.335%, because this right here was the line in the sand between bulls and bears. Because this up here, as long as the market was below this, this was a fake out and this was resistance, 4.335%. Once we got the reclaim right here, okay, that flipped the script for everything, right? It put the market back above that level and it targeted this high up here at 5%. Now, like I mentioned over the weekend, this move that we saw from the US 10-year is when the DXY absolutely ripped higher last year. That right there that I just showed you was this move from the DXY. So that was an incredible move from all the way down here around 100 all the way up to, above 107, okay? So if we get something similar, then we could be looking at a much higher DXY, all right? And I do think that we will, just based on the chart right now. But I do want to point out, though, that this here a few weeks ago from the US 10-year, this actually led the DXY, because if you look here on the weekly, right? So 3 weeks ago, you can see that the DXY had not broken out. The DXY was doing nothing really. It was just sideways here. And that's why, okay, the US 10-year is why I was telling VIP members in Discord to watch for a dollar rally and be really careful about trying to short the dollar, because we did see a weekly reclaim of 4.335. Okay, so the bottom line here, guys, is if we see this market, rally up here toward 5%, that could be a significant move higher for the DXY. If we see it test the top of this channel, then we're looking at, something like we saw last year back here, that took the DXY, significantly higher from 100 to 107. So looking here, if from this low we were to get something, similar down here, right, then you're looking at a move up there toward like the 110 area, which, by the way, has been my longer term target for months. And that's based on this weekly candle. Okay, so very shallow retrace through here. There's an imbalance up here in this area between 109 and 110. Okay, so all in all, guys, I do think that we are likely to see the US dollar head higher. It doesn't mean that we won't get pullbacks, though. But as for the Australian dollar, I think that all of that, when you circle back to this chart and you look at this range here, okay, and you look at the fake out that occurred up here, the failure to hold above that trend line, we've got the weekly close below 65.12. Okay, so looking at the weekly chart, again, this was the first weekly close below this area since all the way back here in November of last year. So this right here puts the Australian dollar within a 230 pip range. Okay, it saw that range back here, and you can see where we got that move lower. So I like the idea of looking for shorts here while below 65.12. But again, just keep in mind that we have not seen a retest of that just yet. So it's not financial advice, but if you are shorting this market or you're looking to short this market, in my opinion, again, not financial advice, but if you're shorting this market and putting your stop anywhere below 65.12, then you are playing with fire, because there is a chance that, whether it be from current levels or maybe a retest down here at this level, that we do get a retest up there at that key resistance before we get the move lower. But ultimately, like I said, I do like this market lower down here toward those October lows around 62.85. As long as the DXY is above 105 and we have US 10-year yield above 4.335%. Subscribe to the channel and click the bell icon for notifications. Don't forget to, guys, join us in VIP. See the link in the description of this video for 80% off, or click on the link at the top of the website that says Trading Group and join us today. I will see you on the inside. Trade well out there, and I'll talk to you again tomorrow.